I'm going to show you how to set a template up on MT5.
Matron, take them away.
And a warm welcome to one and all. This is your first time here. I am the big fella Scruff, and I'm going to try and put trading in the real world for you. Now today, over coffee, because we all know Scruffy likes it coffee, and he does on a Sunday morning. Nice and relaxing, have a nice coffee and just work my way through the charts, etc., and try and help some of you guys. And that's exactly what I'm doing today. Now, one of the chaps in the Discord, Dwayne there, the hound, woo, who has a foul mouth. In fact, he has a proper potty mouth. He swears more than I do, and he makes me laugh every day when he comes into the video calls. He genuinely does, because we have a Zoom to Zoom call every morning, and when he pops in, it takes about 30 seconds, and it's like, oh, censor him. Crazy bugger that he is, but he's a lovely guy, and I've got a lot of time for him, as I do for everybody in the squad. And if they ask me something, I feel duty bound to help, as I do with you guys as well. And there you go. He's wanting to know whether it can set it up and have it sort of flick the river straight away. You can. Now the river he's referring to is a strategy I use for longer term trades. It's my swing trades, and it's a bread and butter. And if you're following the share videos that I'm doing where I'm building a small account up, you will see the results of what the river's doing, because every morning before I start day trading, that's where I start. I start on that and I do my sort of overviews, etc., set it up and then leave it for the day. Very, very simple strategy. Now with MT5, you can have all of your indicators and tickers and God knows what set up as a template, so that if you come to a new asset, instead of trying to build up your chart again, you can do it at the flick of a coin, if you like. So this is my setup. I'll just drop it down into a default so I can manipulate a few things. But the way this is laid up, these are all the profiles. So the way the charts are laid up, if you like. And that's my alpha watch, my window of the world. If I wanted to say, look at everything that's euro, I can just flick it into the euro. If I want to see pound, same thing. And then if I have my scribbles, which is what he's referring to, I'll have them down here where I can put all of my marks on. And it means I've got a clean chart and a working chart. And these working charts can have templates overlaid on them, so in a quick flash, you can change it to look the way you want it without sitting there and marking it up forever. So let me just put it into the default so I don't mess around with what I've got. And what we have here is just a basket of whatever. Now, if I just take the Swissy for argument's sake, there's a standard chart. But when you first open an MT5 asset for the first time, if I just put on the preset one, which is that, it looks like that. It's horrible. And this is what frightens a lot of people from MT5. Because when you see this, where do you start with it? You know, most people just go, not trading that, you know, but it's just because it's not set up right. Okay, so how can you clean it up firstly, and then I'll show you how a template works, and I'll show you how quickly it works once it's set up. Now, if you come to the indicator, there's two ways to get rid of it. You can either just right click and just delete the individual indicator like so, or when you right click, it'll say indicator list. So if you click the indicator list, it'll show you what's on the chart. So if we click that, delete, click that, delete, click that, delete that as well. So you're now left with this. So you got rid of all of your indicators if you want to get rid of them. But that still looks bloody horrible, doesn't it? So if you right click, click properties, you can start manipulating this. Now you can say, well, what do I want to see? Do I want to see the grid? No, I don't, because I don't like grids. They're horrible. You might, but I don't. Period separators, these white lines. I don't particularly like looking at them either, so get rid of them. Colours. Well, at the moment it's just green on black, but you might want white. Okay, but you can manipulate this all you want. For some reason, actually, I don't know whether this is the way my silly head works, but on my web trader, my normal account that you see my wages on, I prefer it white. With MT5, I prefer it black. Maybe I'm wired up wrong. Well, I know I'm wired up wrong because Winky tells me I'm wired up wrong all the time. Then again, she's wired up wrong as well. She must be to marry me. Anyway, sorry, I digress. You might like the candles this way. So you can go, right, okay, if the bar's going up, I want it sort of a bright green. If the bar's going down, I want it a bright red. And now this is changing. Well, what's the body of the candles? Well, let's have a look. So if it's going up, I want it to be the same. And if it's going down, again, I want it to be red, the same as the wicks. Just like so. And then if I click OK, boom. Looks a lot neater. I can use my sort of expanding tools up here to make it look a bit better. Press the indent, and then there you go. That's your chart set up. Now this line here is the price line where the current price is. So you can have a quick snapshot to see is the price sort of coming into a recent swing, which it is here. If you don't like it, again, just go into properties and just switch it off. Dead simple. Just quickly show you. Click show. It will have price line. There you go. Just get rid of it. All right. I prefer that because I like to put support and resistance lines in myself. Well, I don't really call them support and resistance because I don't like the term. I prefer areas of interest or magnet points because that's all they are. And sometimes the way I talk is a little bit different, but that's because I'm predominantly self-taught, but I also came into this from industry. I wasn't taught the narrative. So do excuse me if my language is sometimes slightly off whack. Maybe that's why I'm reasonably successful at this, because I didn't come into it the way you guys did. I think pretty much most of what you see and hear is absolute bollocks. Genuinely is, and it means absolutely sod all. You know, you can talk about all these fancy words as much as blue in the face, but a chart will do three things. Goes up, goes down, it goes nowhere. You eliminate nowhere, you're at a 50-50 situation. And then from there, you build on layers to make that 50%, 60%, 70%, and then you become successful. Boil it down to basic brass tacks, and you'll find this job is quite easy. The hardest part is looking for the Holy Grail and believing that there's a magic system out there. Well, that's why you fail. You know, might come as a shocker to you guys, but unicorns don't exist. They genuinely don't. And neither does the Holy Grail. Go watch Monty Python's Holy Grail. It's about as close as you're going to get to it. So I nearly got on one. Right. Templates. What are we looking at? Well, you can just drop on this whatever you like. As the Hound was alluding to the river, I won't put the river settings on because that is for them guys. But what I'm about to do is exactly the same set sort of where you would put the indicators on. So what we'll do is we'll just put a couple of basics on, and I'll kind of give you something to go along with it. So you can say, right, okay, I want an indicator on the chart and I want an indicator under it. So it's like a moving average, a Bollinger Band, which is actually overlaid on the candles. And then you have a secondary indicator that is off the chart, like an oscillator. And you want, and let's be honest, in fact, I'll take you through something. So you can change this to suit yourself. So for argument's sake, I'd like to see green and want that nice and thick. And there you go. All right. So there's a Bollinger Band. Very, very simple. Okay. And you want an oscillator. So click this button and we'll come to an oscillator, and you can put in whatever you want, whether it's a D marker, RSI, stochastic is a popular one. Now here you could have, say, 1453. That is a standard setting. You can have 1433, or you can have 533, which is the quick setting. So if we put in 533, they're the periods. Again, like I was changing these, you can alter the thickness levels, etc. there, and just go boom. Very, very simple. Now, what we see here is quite an easy setup. Now, why would you have two indicators on a screen? Well, it's actually so they complement each other. What you got to remember is that an indicator is always lagging. It's following the price. And because of that, they normally can't really be used on their own. So what you want is a way to filter the market. And this is a good example, actually. Just to give you an eye shot of what to look at. If you're looking at a Bollinger Band here, it's burst out of the Bollinger Band on that candle. Just move that backwards slightly. You'll see it's come out and it's closed outside it. Now, traditional way of trading is, oh well, if it's outside, that's it. I have to go short, because the way a Bollinger Band works, goes to the extreme and it works to the other extreme, and it does, because there it is there. It came down to the other side, it's gone back out the other side, and it's come back to the other side. Right, okay. But if that's the case and you entered here, you've got to sit in a hell of a lot of heat before it came back down. And when it did come back down, it's not a million miles, because in that instance, you would kind of be getting in around there. So you've got to sit in all of that heat to eventually try and get out down here. And the chances are, the second that candle came in, which is 2 ticks underneath the line, you would shit yourself and then get out. All right. Whereas if you had a little bit of bollocks, you might have hung on to this, right, and got a little bit extra profit. And why? Because it's the human emotion, and we can't get away from that. Because once you're sitting in that, you'll just be relieved to get out, right? Well, is there a way you can lessen the load? Well, there is, and that's why you have two indicators in a situation. So yes, that is poking out, but these are not in this overbought situation, the stretch situation. And the stretch is above the 80 and below the 20. And then equilibrium, if you're unfamiliar with that term, it just means middle ground. It's center point, okay, is the middle, all right? It's where the waters relax, okay? So in this instance, well, no, you don't. You wait for the next candle, which is this one. These are still down here. They're not up. So you wait for the next candle, right? You're still waiting. And why? Because the red one is not up there either. But you can keep an eye on this. This would be a good time to start putting alerts on and watch lists. Because at this point, what you are seeing is the start of a move, okay? This is starting to get overstretched. Backs down. Right. Now we're starting to rock because it is just crushed over. Okay. We are now looking to enter. Get our line. So you would put an order there waiting. Now if you are trailing, and trailing means following the price didn't come down into the line, but it closed going the opposite way. In other words, in this case, you were going to go short, but this candle is long. you would move your order to underneath said candle, just like so. Closes up here and you wait. Well, it didn't come back down. The next candle closed. It's still green, which tells you to move that up to there. The next candle surges up, and at the same time, all of this is above, and it closes green. So you put your order there and you wait. And then what happens? The price can't hold on to itself anymore because all of the buyers are exhausted, and we're now looking for an entry point. And because this red line is a pending order, comes up, picks the order up, and now you're going into the trade, and it hardly goes against you. Very simple, easy strategy to do. It's one of the extreme family sort of way of trading, and the extreme family is looking for indicators that are completely stretched, and they come from oscillators and Bollinger Bands and D markers, etc. Okay. So we like this setup. We think it's good. Okay, Bolly setting here. What's that got to do with the price of bread? Well, what if I'm not looking at the Swissy? What if I want to look at Euro, but I want to use these settings? Well, that's where your templates come into play. So if you click on your templates and you click save, we'll come here and we'll just give it a name, the dog, in respect of you, Dwayne the dog. Well, it's actually Dwayne the hound, because we've got two Dwaynes in the group, and one of them is the dog because he's called Dog Blind. So a little salute to you, my friend, and I hope you move over to Hawaii. Is great. And then we've got the Irish one, who is the hound. You know, he's like an extra from Game of Thrones, this fella. Anyway, so hound, but we've wrote dog now, so we're going to leave it with dog. Click. It's done. Right. Drop down into here, and I go, oh, okay, I want to try that one on the Euro. So there's my Euro. There's the settings that I had in originally. Come up to my template. There's the dog. Boom. In it goes. And just to kind of give you an idea of how this all works, here is another situation. There's your accelerant candle pushing out of the Bollinger Band, but these are left behind, even though that is a massive accelerant. Okay. Wait. This candle you would wait. Why is that? Because the red one's not up here yet. So you're hanging on. Then you wait. They are both in there. So we're going to drop a line onto this. So you can see that down there. Now, we know we're ready to sort of trail. Why? Because we've just seen these come up here. We know the market can't hold on forever. That candle is closed, which goes to there. Okay. This one's green, going the other way. So we're going to go on to there. And then finally, that one closed onto there, and that would have nipped you in. Okay. So now it's just a case of, well, where do I get out? You know, very, very simple. You put a fib on there and trade down into the 23. You could trade it into the 50, whatever. Now, all of that hinges on one thing. And that one thing is where your edge comes. And it's called the double D for us in the squad. The dominant direction. Always be trying to trade in the dominant direction. So in this case, if that is going short, but your dominant direction is long, what you would be using this situation for now is thinking, right, I'm watching this to relax. So you would then watch this come the other way, and you would only be taking the orders at the downside. If your dominant direction is short, you would then be looking to enter when it's at the upside. All right. So again, it's filter. And you're always coming down to binary choices. You know, yes or no. Am I going with the dominant direction? Yes or no. Yes, right, I'm going to monitor this and I'm going to go with it. No, I'm going to leave it alone till it does align. Makes your trading a lot safer and it gets your win rates right up. So there you go. Hope that helps. Genuinely do. If you're stuck, I'm very easy found. All my contact details are below. If you found value in this, do hit the like, share it to your friends, all that sort of thing. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.